Check. Hello dear viewers, my name is Rakesh and I'm your host with the webinar EUR USD and GBP USD technical analysis today. Today is 4th of August 2021. Alright, we already have MGA in the chat. Welcome MGA to your own stream. Damien is here. Hello, welcome to the stream guys. Okay, and I must tell you that I am a community member and I'm not a Dukas Copy employee. So that because they tell me to say this on the stream because they want everybody to know that I am not the actually their employee. So they want to tell you that I am a community member, which I am actually. So yeah, all the views and opinions over here are my opinions and my views, not the Dukas Copy views. Okay, for their views, of course you can check their the research team's page, which is there in the description. Okay, so you can go and check their research. Actually their research team is also very good, and as the name suggests, we will be carrying out the technical analysis of euro against the US dollar and the British pound against the US dollar. And of course, if the time permits, we will also carry out the technical analysis of other major pairs. Now in this session, we will be strictly talking about the technical aspects of trading and ignore all the fundamentals. And okay, if you know, just to give you a brief about technicals and fundamentals, if you don't know, I think I have already told this in one or the other webinar that fundamental reasons are the reasons for the price to move in a direction, are the technical information or technical reasons are the reasons for which the price stops or gets rejected from a place. Okay, so reverses. Sound is very low. Anis Ahmad, I'm sorry, I will try to increase the volume. Maybe why the sound is low, let me know when you're comfortable with the sound because I am trying to increase the level. So I have increased the level to 20% and taken the mic very close to my mouth. Let me know if the sound is good. So what I was trying to say is that the fundamental reasons are the reasons for which the price starts moving in a direction, and or otherwise it changes its direction, or the volume is okay for me as it increased when I think you came close to mic. Thanks. Okay, Mr. Anis Ahmed, thank you for letting me know. Better now. Good. So we'll begin. So what I was saying is that fundamental reasons like some rate change, or say some earthquake somewhere, or some natural calamity, or maybe some government change, these are the reasons why the price starts moving in a direction. But the technical reason, like a support, previous support, a previous resistance level, a 50% of the Fibonacci, or say for 61% of the previous move, these are the reasons why no, I have not started. Actually, I am just trying to talk. I have not started looking at the charts, my friend. Don't worry, Anis, we'll be looking at the charts. Just let me give you this piece of information about the fundamentals and the technicals, because everybody does not know about the charts. And okay, so the thing is that fundamental reasons, they move the market. Technical reasons, they tell us till what point or till what level or zone the markets can move. All right, and as a technical analyst, we know that all the information, every minute information, whether it is political or fundamental in nature, is already priced into the chart. So we will try to follow the charts only for analysis in this program. We will only be using the candlestick charts. There are other types of charts also, like line chart, area chart, and bar charts, but we will only focus on the candlestick charts. And if you are new to the technical analysis, I would request you to go to our channel page and then select the playlists and search for the profitable candlestick patterns and the profitable chart patterns playlist. It will help you in understanding what we are talking about in this program. Those playlists are made by me only, and at the end of this session I will be taking the questions from the viewers. So I would request you to keep your questions to be asked till the end of the session, or otherwise you can write them in the chat and I will answer them at the end. Last but not the least, everything that I say in this webinar is only for information or the knowledge purpose. When if you want to open a trade, when I say buy here or sell here, it does not mean that you have to buy. It means that there is an opportunity, somebody may use, somebody may not use, but it is all at your own discretion. You have to do your own research before you put your money on the line. Okay, with this said, I will quickly go through the risk disclaimer, which is a must for me because I am doing a financial webinar. It says that the trading foreign exchange on margin carries a high level of risk. Of course, foreign exchange people trade on margin. So my suggestion is that trade on the lower leverage sheets, okay, and do not over leverage yourself, which you cannot sustain, and never take a trade based on what you see in this video. I mean, you can take the trade, but the decision will be yours. I will not be responsible for that because I will not be held responsible for any losses that occur in your accounts. Although I will not be even taking the credits for the profits that you will make. Okay. So you and only you are responsible for deciding if you are comfortable accepting the risk that is involved in forex trading. But through the information that I provide you, I will try my best to minimize the risks that you are going to take. Okay. With this said, let us move to the first chart of the day. No, this is not the chart. We have to start from the euro dollar here. All right, now you guys see euro dollar. This is the daily chart of the euro dollar. Actually, there is a lot of clutter already, and I want to remove this clutter from here. Those who are following this channel from or this webinar from a long time means from 1 week or so, they know that this falling wedge was broken. Then this weekly trend line, this weekly line was getting respected on the daily chart at least. And if we can just remove these now, because we know that if this is a falling wedge, then the target for the price is 1.1975. So we will comfortably remove these lines to make the charts more clear. Okay, now this was the channel on which the price was moving in 4 hour. So I will switch to 4 hours and then you will realize that okay, the price was coming down in this channel and we were expecting the price to either take support here or maybe at this rising weekly line. Why I was saying so, because once the price has started rising from here, once it made a low here and then the higher low here, we have to create a channel joining these lows like this. So the price can even reverse from here, or it can come all the way here where there are confluence of the supports. One is this rising channel support and the second one is this weekly line, which is a long term weekly support, and it is also dynamic in nature because it is increasing in value as the time is passing. So there is a possibility that this will act as a support for the price, although this level was a very important level in the past, this 1.1840 region. So there is a possibility the price may reverse from here also. But you see the bearishness of this current 4-hourly candle, it has engulfed all the price action that has taken place from the 30th of July. Okay, the range of this candle is huge and it is showing us that I am going to take the euro down, maybe all the way down to 1.1799 to 1.1800 levels. So what is recommended here? If you are not long, don't buy now. Maybe you will get an opportunity when the price goes here. Okay, in that case you will buy here and stop loss will be below this, or maybe, or to be more safe, you can keep a stop loss below 1.1751 and keep your targets at 1.1840 first and 1.1975 second. But first of all you have to measure the structure of the market. So this is the market structure as of now. The market is trading between these two symmetrical triangle lines. Okay, symmetrical lines, weekly lines. But if the price fails to hold this 1.1704 region, then the price will start its downtrend, because the structure of the market will become a downtrending structure. Now those who are I can see that there are 6 people right now with me, so I understand that there are new faces also here. So here see, the price was making higher highs and higher lows, but here the price failed to make a higher high here, and if it breaks this low here 1.1704, then it will make a lower low, lower than this one. So that means when the lower lows and lower highs are formed, the downtrend starts. Till now it has not made a lower low, but it is on the verge of making a lower low, and if it makes a lower low than 1.1704, then the downtrend will begin and the structure of the market will change, and we will not be looking for any buying opportunity then. We can look for a buying opportunity only above 1.1704 region. If this price level breaks, then we should be looking for the selling opportunity. I hope you got the idea. So right now we are actually looking for the buying opportunity, although the price action is very bearish today on the 4 hour, but we will let it go all the way down. Maybe here we will get a buying opportunity when the price will start behaving like this, maybe. All right, this is what we have to look for. And one more thing I wanted to discuss with you guys. This is called the fear of missing out. The fear of missing out. If you can control your fear of missing a trade, I think you can be a very good, consistently profitable trader. And one of the best ways that I tell about overcoming this fear of missing out is to check for the risk for reward ratio. If the risk of to reward ratio is not 1:3, you should not enter a trade. It does not matter. It will give you a gazillion pips, million pips, gazillion pips, how many pips it gives you as a profit. It does not matter. If it does not satisfy your criteria of 1:3 risk to reward ratio, do not enter a trade, because the next trade will come again. Statistically, if you do enter a trade only when there is 1:3 risk to reward ratio or more, then you will go home profitably after 10, 20, 30, or in the long run. I hope you got the idea. If not, we will discuss more, because I have committed to myself that in my every webinar I will take 1 or 2 minutes to explain this risk management, because if we don't talk about the risk to reward ratio, then you will be right now you will be very keen. As soon as the price comes here, you will want to buy here blindly. No, let the price come here, let it get rejected from this area, like this one, bullish pin bar, this bullish pin bar, this bullish pin bar here. If something of this sort happens here, then that will be our indication, not confirmation, an indication that okay, there are buyers here now, you can open a buy trade. But a best idea about opening a buy trade at this such a price action is, if you see a bullish pin bar here, if you see a bullish pin bar here, you buy or keep a pending buy price, pending buy position at the high or 2 pips higher than that high. In this case, if you do this, then your price will be triggered only if it breaks the high of that bullish pin bar. That means if there are more people ready to buy at the higher price than the previous bar. See, understand the psychology of the market. If nobody is ready to buy at the higher prices, the price will not go higher. So there should be people who are ready to buy at the higher prices. Then only your trade will be triggered. Otherwise, you will stay out of the market, which is good. No problem. Sometimes sitting on the sidelines is even a better position than having a long or a short position in the market. Okay, I hope you got the idea. Sometimes I talk too much. I'm sorry for that, but I think this is the information that I am bound to share with you. So this is the area which we will be looking for a buy position. This chart will stay like this only till the time next webinar comes, and we will see what happens here. Okay. So on the downside, I told you that this 1.1751, and if that is broken, then 1.1704. This area is of huge support because it is also an upswing pivot. See, we have written here. If that is broken, then downside trend will start. On the upper side, we have resistance of, if the channel, this channel is intact, which I think it will be, then this resistance line will be a dynamic resistance for the price in the coming days, and of course 1.1975 is what we are expecting the market to reach soon. Talking about the Great Britain pound, here also there's a lot of clutter. Maybe we should, okay, this channel is broken. I am relieving this channel from this area, and yeah, the price is actually struggling between 61.8 and 50% of the previous fall, and it also includes the important price level on the chart that we have marked here is at around 1.3910 levels. The price is struggling in this range. Uh, the structure you see has already become downwards. Okay, why I'm saying that it has become downwards, those who are new, for them, the price was making higher highs and higher lows. Okay, suddenly the price made almost same high and then broke below the previous low, and then has made a lower high, but this lower high is not confirmed until and unless we see a lower low. So what we are expecting now for the price is to make a lower low. So that is why we are saying that there is a very high possibility that the price will start falling from here and come back even below than the low of this candle, which is at 1.3572 regions. So we are expecting a down move in this market, and it's because it failed to break above 61.8% of the previous move. So there is still a chance that the price will go down and eventually break below the previous low and maybe get some support at this channel support line. Okay, with this, on the contrary, if you see for some reason the price starts going upwards, then it will face resistance at 1.40001, because this is also a psychological, there are multiple reasons actually. You see, this level was an important level in the past. This is the one region. Then there is a second reason, because it was also near to the 61.8% of the previous fall. This retracement of 61.8% is sitting just 10 pips shy of this level 1.400. Third reason is that third reason is that it is a psychological handle. Well, what is a psychological handle or a psychological level? It is a level which has 00 in the end. 00, 1.4000. So people tend to book profit or initiate new positions at these levels. So there's a lot of volume at these levels, a lot of market participants. So market tends to change direction at these levels. Okay, 1.400, 1.500, 1.4100, 1.4200, something like that. At the end, if there is 00, that becomes an important level. So when the price goes here again, is it possible that it will face resistance here? Yes, almost near to 100% there is a possibility that the price will reverse its direction once it goes here. All right, on the lower side we have support at around 1.3831. This is a minor support, and this was also a minor support seen in the past. So this level may provide some support to the price, but a strong support is coming at around 1.3670 regions. This was the previous support here, and over here also this was the resistance in the past. Yeah, and if that is broken, of course we have then this falling channel support line to act as a support for the price. Okay, I hope all this whatever I'm saying is holding some meaning to you and you are able to understand. If you find it difficult, or because I think that you are able to understand, if you find it difficult, please let me know in the chat if you don't understand something, because I will be very happy to make sure that everybody understands. Okay, here is a lot of clutter. Actually this clutter was created by me today. I am removing some less important or unimportant lines from the chart. Just before deleting, I want to make sure that you know what this rectangle was. Actually this rectangle we had created, which was equal to the height of this high from this uh, what is it called, support level that we had created. Okay, if we just move this rectangle and align it with this high, you see it is equal to the height of this support and this triangle. So because the triangle was broken here, okay, was broken here, so we kept it here and said that okay, the measured target in this case is equal to this. So we created this line 0.7170. so this is the measured targets. So we will delete this rectangle to make the chart clear and edit this label as measured broken triangle targets. So this makes us easy to remember what this line is which we have drawn. So every time I move close to this line, it will tell me here, see, measured broken triangle targets. All right. So after break, we were expecting the price to move like this, but it has actually moved so fast, and it has already broken above 0.70439 levels, and after breaking above, it has already come back. Okay, we'll talk about this, what is the next possible scenario here. But yes, this technical analysis is all about possibilities. So what is possible now? We are seeing a bearish pin bar, of course, but it is not at the resistance. Okay, if you consider these levels as resistance, these 1, 2 and 3, of course then it is a level of resistance. But in that case, if we consider these as resistance, then the price is in a range. You see, then the price is in a range, and if it is in a range, then the price will come back again to 0.69169 before it starts going upwards. So what is the possible scenario here? Now there are two possible scenarios. One is that the price will come back here and then eventually go up and may even break to the downside or may even break to the upside. Okay, anything can happen. So what is the best possible thing that we can do in this scenario? We can wait for this support to hold, or we can wait for this resistance to be tested again and then go as the market goes. But do not open a sell position very close to this support, or do not open a buy position very close to this resistance region. I hope you got the idea how to trade the range. Why I'm saying to take the positions here in this range? Because the range is huge. You see, the range is around 167 points, and if you get a sell here, I mean near this area with a small stop loss of 46 points, you still have 150 points to target, which is more than 1:3 the risk that you're going to take. If you're risking 40 points or 45 points, then you have almost 150 or 160 points to target, which is more than 1:3 risk to reward ratio. I hope that covers it. But yeah, right now if you say should I sell it now, no. Why? Because this channel's resistance line will act as a support for the price now when it comes back to this region. So you don't have to have a fear of missing out. You should open a sell position as close to this resistance. But on the bigger picture, in the bigger picture, New Zealand dollar is in a buy mode. So it will be a better option to look for the buying opportunities. Why I am saying so is, see, the price was making higher highs, higher lows, but then here the price made a lower low, a lower high. Again the price made a lower low. Okay, sorry, here lower low, then the price made a lower high here, and then price made a lower low here. Okay, sorry, it is still in a downtrend because it has failed to move higher than 0.7104. So the price is still in a downtrend. I think this will be a good idea to go short here with a small stop loss higher than 0.7104. In this case, if at the current level we go short, although I don't want you to go short now because the daily candle has not closed yet, but still if we short at the current levels, we will have a stop loss of around 70 points if we take this high as our stop loss. Okay, so we have 70 points here as a stop loss, and possibility of getting the profit is around 135 to 140 points. So 1:2 risk to reward ratio, not a good idea. So if this is not a good idea, then I will not open a trade, although I know that the price will go back to 0.6916, but I will not open a trade. I don't have a fear of missing this trade in my mind, because this trade does not suits 1:3 risk to reward ratio idea, which is a very essential idea to be profitable in the long run. So I will miss this trade deliberately because it does not fit my criteria or your criteria for that matter as a good trader. Okay. All right. So yeah, on the downside, this rising channel's resistance line may act as a support. If the price comes back inside, then this rising channel support line will act as a support. If that is broken, then even this horizontal level of 0.6916, why this is an important level, you can see this was an important resistance in the past here in the month of February and January, I mean 2018 and 2019. And now the price has come after a long time, the price has come to these levels after a long time, so it will act as a support for the price, which it is already doing, and maybe price will even jump from here. Okay, this is a general question. MJ is asking, do you place your stop loss at the first high or low closer to the entry? No, I will. You see, if I am keeping a very small, what is it called, position, if the position is very small, like I've told you that if you are risking 1% or less of your capital on a trade, then I will keep my stop loss sufficiently far enough so that my trade gets time to breathe. Like in this scenario, if you say if I am short here, I have two options here. One is to keep the stop loss above the high of this candle. The other option is to see where the if my idea becomes negated. Okay, my idea is that the market is in a downtrend. So my idea of market in a downtrend is negated when the price makes a high higher than this high. So if the price moves higher than this one, I don't want to stay in this market in a short position. So I will keep a stop loss higher than this. Okay, higher than this. And I will open short positions. Short positions means, sorry, small positions. My position size will be small. But if I am very aggressive and I am playing say on the 4-hour chart, I will tell you now. If I am say playing on the 4 hourly chart and I see okay there is a bearish pin bar, maybe I will open the position here and keep my stop loss here, but then I will not target all the way down. I will close my position at the next possible support that I get, because if I am taking the trade on the daily time frame, I am understanding or I am assuming that the market is in a downtrend and it will make a lower low in the coming days. So I am comfortable in keeping a stop loss a bit higher here, so that if today or tomorrow the market moves against me, if it will close my position only if my idea of a downtrend is negated, and it will be negated only if the market moves and makes a high which is higher than 0.7104. So your question that do you place your stop loss at the first high or low closer to the entry? No. Say if this market would have not moved here and the price would have been here, then you would have been thinking that I will place my stop loss higher than this one. No, I will still place my stop loss higher than this one, because the idea of a downtrend will be negated here only. I hope that answers your question. If you're taking a trade for the long term, you would keep your stop loss at a place from where you know that your idea is nullified. And most important thing when you open a trade is the position size. You have not to adjust your stop loss, you have to adjust your position size in such a manner that if your stop loss gets triggered and you are wrong in this trade, then you should not lose more than 1% of your capital. So say if I have 100 pips of stop loss here, I will adjust my position size in such a manner. If my say I have say $10,000 in my account and I am taking a trade in New Zealand dollar and I have a stop loss of say around 100 points here. So what should be my position size? you have to adjust your position size in such a manner that you should not lose more than how much? Because my account is 10,000. What is the 1% of 10,000? Anybody with me? Who will write in the chat? What is the 1% of 10,000? Let us participate. I am waiting for the answer. How much this session is going to take long, I understand that, but it is a very important concept and we need to know what is the 1% of 10,000. 100. Okay, Damien is very right. 100 is the amount that, yeah, 100 euro, $100, whatever is your quantity or your capital. So 100 is the amount. You should not lose more than 100 if you fail in your analysis. Okay, so the idea here is that if you fail, you should not lose more than 100, that is for sure. Then what should be your position size? Your position size for 100 pips cannot be more than 10,000. Okay, your you should only sell New Zealand dollar 10,000, that is 0.1 standard lot only, because if you lose 100 pips in that, you will lose 100 points, but you should be able to gain 300 points if you are risking 100 points or 100 pips. If you pass, say if you don't fail in your analysis and you are right, then you should be able to make 300 points at least. In that case, if your position size is 10,000, you will make $300 in that. And if you say in a long run, if you notice, out of 10 trades, if you only win 3 trades, then also you will go home with 2% of profits, that is $200. But with this type of analysis technicals, you will go home with more than 8 or 9 successful trades out of 10. So 9-4, 9-3, 9-5, sometimes I have taken trades 1 is to 10 or 1 is to 12 risk to reward ratio also, because you know where is the possibility of a reversal. I hope you get the idea. This is a very small range. You should not take a trade here. That is why I'm saying you should not take a trade here, because this is a very small range. I'll explain you. In the USD CAD, there is a very big range in play. There you should be taking the trades. Okay, but not here. Okay, let's move on to the Australian dollar. We were not covering it yesterday. For some reason, I actually missed this chart. But now we are going to cover this one also. Okay, I have drawn my levels, which are like this. On this chart, actually, I can see that there is a head and shoulder breakdown. If you know what is a head and shoulder breakdown, if you don't know, I will explain you. The price is making higher highs and higher lows, and suddenly the price makes higher high and then fall back to the previous lows level and fails to make a higher high, and actually makes a lower high and then breaks down. I mean, breaks down means it breaks this low that it has made. Now after that, if we join this previous low and the recent low that the price has broken, and this is actually called a neckline, and after a break, most of the time after a break, price comes back to this line again to test it as a fresh resistance. And where is our opportunity? Our opportunity is here. Here is our opportunity to go short in this pair with a small stop loss above this and keep a target, which is, this is a measured move, my friends, and in this case the targets are from the break to the highest high that the price has made. So approximately this is the target for us, this one. All right, and let us compare it with this one here. See, the price was making higher highs and higher lows in this one. and here the price made this low, then high, and then came this one. If this low and this low you join, you see that there is a break of this area here, this here, and then there is a retest of this area as the fresh resistance, and then there is a sell off. Of course this price is falling in a channel, so this channel's support line is acting as a small support for the price, but ultimately the price has to fall. Why? Because this trend line here, this neckline here, is a falling neckline, and it is going in the future also. So whenever the price comes to this level again, it will act as a resistance and will try to push the price down again. Okay, this is one thing. Now what is the possibility, till what price, what level the price can fall now? To measure that, we have to put the rectangle from the top of this to the point of break, and this is the point of break approximately. So you take this rectangle and put it here. So I am expecting Australian dollar to go all the way down to this level here, around 0.7000 levels. Ben Okoro, hello, welcome to the stream. Today you are late. It's okay, but you can see okay, because this will be saved on YouTube channel, so you can have a look at it later on. Okay, so I hope you got the idea that the price is going to go here and get rejected, and maybe even 0.7413 is also acting as a resistance, so maybe the price will be pushed down from here. On the daily or on the 4 hourly, you can draw a small channel on the recent price action here, and as soon as this channel is broken, to the downside, you can initiate your short positions. Okay, yes, you can. Yes, I mean it. You can initiate your short positions with a stop loss higher than 0.7413 regions, or whatever you think that the high the price has made. Do you not use smaller time frame for those with small equity? Do you not use smaller time frame for those with small equity? No, with small equity you should be trading the larger time frames, not the smaller time frames. I am coming to this, Benokaro. To this question I will be answering in detail. You should be actually trading the larger time frames because you have small equity. Okay, the reason I will explain in a while, don't worry. So once this is broken to the downside, that will be your confirmation to enter a short again. All right, and by that time I think the price will be already in the resistance zone, and will give you a small stop loss level and huge targets to the downside, that is 0.7000 levels. Talking about the US dollar against the yen, we were expecting the price to come back below this, but because of some reasons, maybe some fundamental reason or something, the price has given a bullish engulfing candle at the support. When a bullish engulfing forms at the support, the price tends to move higher. Now if the price tends to move higher, it means that there is a chance that the falling channel resistance will be tested again. If that breaks, the price will head up, and if that does not break, maybe we will see 109.06 again, and maybe eventually 107.47. But if the price keeps heading upward, then the next resistance level for the price will be this rising channels resistance line, and after that 112.18 region, because this was the previous resistance see in the past on around 13th of March 2019, then in the month of April, 28th of April approximately that time, and then after it was on 20th of February this year, not this year, sorry, in the 2020 last year. So what idea I have here is that if you want to open a buy position right now, you are very close to the falling channels resistance, not a good idea to buy here. But even selling will not be a good idea here at the channel resistance, because if you sell here, then the buyback is very, or the support is very close, that is 109.06. so only approximately 50 to 60 points of range. But the structure of the market is up. You want to look for a buying opportunity. The best opportunity you will get only once the price breaks above 112.18 and comes back to test this. So we have already marked it on our chart. That will be the best opportunity for us to go long. Shorting will be possible if the price gets rejected at 112 and breaks the recent low that the price would have created. That will, I think, be our opportunity to go short in this pair. But right now, no, nothing, no trades to be opened in this one. Okay, so USD CAD, this is what I was talking about, to play range. You see how the range is being held here from 1.2061 to all the way to 1.46898. This is the place where you can play ranges. The price is trading between these two ranges. Now it is headed upwards. It has broken this long-term falling trend line on the daily chart, and see how the price is making now higher highs and higher lows. Now this may be your opportunity to go long. If you have failed it, no problem, but still very close to that recent low that the price has created. And now this channel's support line is trying to act as resistance, which I think today's push higher will maybe able to push the price back to 1.2646 region, which may act as a small resistance because it was a resistance in the past. But eventually I am expecting 1.2914 and 1.3015 region to be tested in this price, I mean in this pair USD CAD. We also call it loonie. But yes, expect some resistance at this channel support line, because a lot many people would be watching it already, like you and me. Yeah, right now 1.2528 is the support to the downside, and 1.2646 is the resistance. This is horizontal resistance, and one is this dynamic resistance, which is posed by this rising channel's support line. Of course, because it is broken, so it is acting as a resistance. Okay, talking about the USD CHF. Okay, one thing more about USD CAD that I wanted to tell you about is that when you are playing ranges, you have 1:10, 1:20, or maybe 1 is to a lot many risk to reward ratio. See, if you would have bought near this range low at around here, say, just I am giving a hypothetical, say, scenario. See, the price was in a very small range here. When it broke out of this and came here again to test this as the fresh support, if somebody would have bought at the close of this candle, say at around 1.2182, and your stop loss would have been, say, below the low, which is at around 1.2002, which is a psychological handle, so I will even shift it 5 pips lower than that. So if your stop loss would have been, say, around 180 or say 200 points here, okay, then your possible targets were around here. So you are going to target around 739 to 800 pips. So it is 1:4 risk to reward ratio. I hope you got the idea. You have to play ranges like this also. Okay, and actually this is the smaller range that I was talking about. If you target 1.46898, you can just calculate yourself how much bigger the position or the reward can be. 1.46 is not even on the chart. Okay, so this is approximate 2400, almost 1:10 risk to reward ratio. So you can play such ranges also, but it will take a lot of time, maybe a year, for your trade to give you the fruits. But yes, it is a lot safe because you have opened the position very close to the stop loss, or say very close to the support level, which was from where the price broke out. So this is a very healthy position in the long run, and it will give your account or equity a very good margin to grow. Okay, talking about the USD CHF, perfectly making this symmetrical triangle. Current candle is a bullish engulfing candle. It has engulfed the price action of 1 2 3 last three candle, and if it closes higher, maybe even this fourth candle. So expect some up move in the price, maybe to the area of 0.9135 before the price starts coming down to test this long line. I have marked it as a long line, I'm sorry, but it was a daily symmetrical triangle angle. Okay, so here there is a possibility the price will find some support here and resistance in this range 1 2 3. All these are actually, now this is a confluence of the resistance. Actually, this area is a confluence of the resistances. If the price goes here, it will definitely fall, but if for some reason the price is able to go higher, and strike this channel line. This is a long term falling channel resistance line. If the price strikes this line, it will definitely go down. So that is why we have marked it already, that if you see something of bearish engulfing or say bearish pin bar being made at this line, you should open a position with a small stop loss higher than that, and you should target the low of the channel. In this case, what will be your risk to reward ratio? If you say keep a stop loss around 40 to 50 points, you will still have 800 pips of take profit target. This is just a hypothetical thing. You will have 1:16 risk to reward ratio. Have you seen anything like that before? No, this is very much possible, but it takes time. It takes time. It takes time for the fruits to come. It will take almost 1 month for the fruits to come, or maybe even 2 months, or maybe even 3 months. Okay. Talking about the Euro GBP, we have discussed it in the past. The price is currently sitting right on the weekly rising trend line. If it breaks below, and even if it breaks below this low of 0.8472, which is very much possible, the price is very close to that. If it closes below this, then the price action, then this whole bullish price action will be negated, and we will see a lower low than this one, and the price will go to test 0.8277, which is the next level of support in this. I think this is already going to happen. On the upside, although this rising trend line will be resistance if the price closes below, and 0.8670 is the next level of resistance after that. No resistance in between. Talking about gold is giving us a bearish pin bar, but is right now sitting at the channel's support. On the daily chart, it is not it does not look as a good thing for the gold. I think I must adjust my channel to the low of this one. Okay, here it seems like that price is now going in a small range, or say congestion here. If the price starts falling here, then 1756 to 1834 will be the range for the price, and eventually it may break or may not break to any direction. Only the time will tell, but as of now it is bearish. We are not going to open any buy position in this one or short position. Maybe we can look for shorting this at the test of this falling trend line, or maybe a buying opportunity at this rising trend line. But in between, it's a not good idea to go and open any position like short or long. You can at this support or at this resistance, but it will be, I think, a whipsaw will take out your position or your stop loss. So better wait for the long ranges to play if you are going to play in the gold. CHF JPY, nothing much. On the daily chart, resistance line, sorry, support line is broken, and already on the 4 hour this resistance has been tested fresh. This support has been tested as the fresh resistance, and the price tried to break below but got support at 120.54 level, and see now the price has given us a bullish engulfing, suggesting that 121.16 is there on the chart. But should you open a buy position here? No, because if you open a buy position, then your next profit target is very close. Okay, it is 35 points, and your stop loss will be around 42 points. So not at all. Thank you very much. I think so. Yes, do you not use smaller time frames for those with small equity? Guys, my analysis for today is over. If you have any particular pair that you want me to track down or do a dissection of that pair, please let me know in the chat. I'll be very happy to do that for you. But for the question of Ben Okoro, do you not use smaller time frame for those with small equity? No, we do not use smaller time frames. Okay, I will do this in front of you now. This is CHF JPY, and this is the daily chart. This is the 24-hour chart of CHF JPY, and from here, just looking at this chart, we can come to know that the price is making higher high and higher lows till this point. Then it made a low here, which was at the resistance of the previous resistance. The price made a low here, failed to make a higher high, again came and made a low here around same levels, failed to make a higher high and made a lower low, was successful in making a higher high, and now there is a possibility that it will make a higher low. So this is the structure of the market on the daily. Can you identify any structure on the 4 hour? Okay, on 4-hour, the price was making high, low, low, and then the price started making higher highs, higher lows. Here eventually it made a lower low, and here it is making nothing. So this particular, right now the candle that is being formed is trying to suggest us nothing but saying that I am a bullish engulfing and I am being made on the support region. So I am taking the price higher, but higher on the higher side, 121.16 is the next level of resistance. So essentially, as we go down on the 4-hour, we have a lot of noise. Actually, this is lesser noise. Still, if you go on the 1-hour, you will have more noise. Now this price action is not telling you where I am going. Here it seems it is going down, and here it seems this bullish pin bar, sorry, not bullish, but the pin bar is suggesting that I am going up. So if you go even on 30 minutes, so if you go on 30 minutes, you will have even more whipsaws. On 15 minutes, even more. So as you keep going down, your trend's direction changes very frequently, and you lose the bigger picture. The bigger picture is the daily chart or the weekly chart, which tells you that where most of the people are trying to take the market. So my friend Okoro, this is not about uh, using time frames smaller just because you have small equity. You can use bigger time frames. It will take more time, but you will be profitable in the long run. If you use smaller time frames, you will take small time to blow off your account. Okay, bigger time frames and small position sizes and proper stop loss will keep your account floating and profitable in the long run. That is what I can say after such an experience. Okay guys, I think there is no more question. With this I will just try to finish this webinar. We have already taken almost an hour. Now I hope you got some idea about the support and the resistance levels that are of interest in the coming hours and days. Please just keep in mind to never risk more than 1% of your capital on any single trade. You can take 2 trades, 3 trades, but on one trade no more than 1% you should lose if you go wrong. Okay. With this note, I shall end this webinar. Please press the like button if you find this video useful for you. Leave your suggestions in the comment section. I will consider them. And please do consider subscribing to the channel for more such videos if you are new. Also, you can join the Dukas Copy Forex community where you can share your ideas with the other traders of the community, and the link is there in the description. Last but not least, if you can share this information that we are doing live webinars every day with those who either trade, who want to trade, who want to learn how to trade, who want to learn risk management, candlestick charts, how to read them, how to interpret them, maybe because sharing is caring, they will know a place where they can come and ask questions. So thank you very much. Thanks for watching. Have a profitable day ahead. See you tomorrow. Bye.